Hello everyone, this is Rahul Jakaria from Sharekhan. Welcome back to exciting 3R actionable stock updates. 3R basically means right sector, right quality and right valuation. These are our investment ideas. Today we have an update on NMDC. Our analyst maintains buy on NMDC with a revised price target of Rs 175. The company's operational performance has been very strong, with robust 23% year-on-year growth in its iron ore production and 32% year-on-year growth in its sales volume in 5 months FY24, and seems on track to achieve its guidance production of 47 to 49 MMT for FY24 and 50 MMT for FY25. The recent commissioning of the Nagarnar steel plant further improves the iron ore sales volume growth outlook in second half of FY24. Long-term volume growth also remains strong given NMDC's target to reach 100 MT of iron ore production in the next 5 years. Additionally, the recent price hike of 7 to 8% in iron ore prices reflects a recovery in international iron ore prices, and benefit of operating leverage bodes well for margin. We thus expect NMDC to clock 12% EBITDA and 15% PAT CAGR over FY23 to 26 estimates. Valuation of 4.6 times FY25 earnings and 4.1 times FY26 earnings EV by EBITDA is attractive, and stocks offer a healthy dividend yield of 5 to 6%. High cash of 11,200 crore or 26% of current market capitalization provides comfort. Next on radar is Cholamandalam Investment and Finance. Our analyst maintains buy rating on Cholamandalam Investment company with a price target of Rs 1,350. The board has approved capital raising of 4,000 crore via QIP. The QIP has been split into equity capital raising of Rs 2,000 crore and rest Rs 2,000 crore through compulsory convertible debenture issuance, that is CCD. Considering Rs 2,000 crore equity capital raise, book value per share is expected to increase by 9 to 11% despite 2% equity dilution. CCDs will be available for conversion into equity shares after September 25 till September 2026. That is the final maturity, at 15 to 16.5% discount to the average share price prevailing at the time of conversion. Healthy AUM growth, bottoming out of margins in the coming quarters, moderation in OPEX growth and lower credit costs should translate into a healthy earnings trajectory going ahead, and likely to deliver a consistently sustainable ROE of 18 to 20%. At the current market price, the stock trades at 5 times its FY24 and 4.5 times its FY25 estimated book value earnings. The stock has outperformed the broader market in last 12 months. For more detailed disclosures and disclaimers, please refer to our research report or contact our nearest branch. Please read the risk disclosure document issued by SEBI and relevant exchanges and terms and conditions on sharekhan.com before investing.
Thank you for watching. To keep up with the latest from Sharekhan, make sure you subscribe to our channel. You can also download the Sharekhan app for all your trading and investing needs. Investment in securities market are subject to market risks. Read all the related documents carefully before investing.